Welcome back to the Property Investing Roadmap podcast.
An investment in knowledge always pays the best dividends.
My advice is consider the long term, the medium and the now.
I'm your host, Damian Collins, here to help you navigate the twists and turns of property investing.
If you're wanting to snap up those opportunities in a competitive market, you need to be on the ball and be ready.
The first part is start early.
What's your goal in investing?
In Season 2, we're shifting gears to accelerate your journey through 9 key steps to financial freedom. From research and strategy to creating a model property portfolio, this is your step-by-step roadmap to building an income from property for life. Welcome to Episode 8 of our journey through the 9 key steps to growing an income from property for life. While many investors focus on property acquisition, and quite rightly, effective property management is crucial to your long-term success as an investor. The way your property is managed can significantly impact both returns and capital growth. Today, we welcome back Robin Ram to discuss how to maximise your returns through effective property management. Welcome, Robin.
Thanks, Damien, and such a crucial topic for investors.
Now, many investors focus all their energy on buying the properties. I know, look, that's the exciting part. You're looking at homes and investments, and you obviously got a bit of debt to go into generally, and it's the exciting part. But Robin, why is effective property management so vital to investment success?
The asset you've purchased is worth $500, $800, $1 million. You want to look after that asset as long as possible. With a long-term plan, that property is going to hopefully be part of a retirement plan for you, part of long-term income. So it's the day-to-day management of that property and looking after that asset over time that will minimise stress, but also enhance the returns that the client's getting.
And look, we see it in our business. Obviously, we've got commercial asset management, and it's very common. But people don't realise it's not just collecting rents when you're managing a property. It's effectively asset management as well, isn't it?
That's right. Yeah, a normal property manager, if they're managing anywhere from 80 to 150 properties, depending on how it's structured, they're often managing $100 to $300 million worth of property. That's a significant undertaking for anyone to do, and they want to do it to that right standard.
Yeah, absolutely. So, Robin, what are the most common property management mistakes you see investors make?
The biggest one will be selecting someone based solely on fees. Of course, fees are important in anything that's done in life. You want to get value for what you're paying for, but without a full understanding of what the value is for that property manager, it's hard to actually say how are they competing, what are they doing differently, and how are they going to better look after my asset. If someone's selecting their asset manager, their property manager based purely on fees, they're generally looking for someone who's going to be cheap. That cheaper person will have, unfortunately, sometimes some cheaper systems, cheaper support. They might be sending their staff more properties to look after, be more cost effective. So there's generally a trade-off. So for a business to be able to offer really good property management services, the fee has to be fair, and that fair fee will allow value to be given to that client.
Yeah, it's absolutely critical. I do see it in the industry where people are shopping around looking for the cheapest fee, but they're not thinking through to the next level, in that every business ultimately has to make some money. No one's going to run a business at a loss in the long run. They might in the short run, but not in the long run. And so if you're getting a very, very cheap fee, that means one of two things. You're going to get very, very low service and low attention to your property, or the property manager they're going to put on and look after your property is going to be overloaded because they've got to get enough revenue out of that property manager. And sometimes they're managing potentially 200 properties with very little support. Well, we've all seen what happens in that. The property doesn't get the right attention. The quality, the tenants go down. They get behind in rents. I can give a perfect example. When I was renting many years ago, I won't name the name of the firm. I was about 16 years ago. I was in between homes. I was renting for a couple of years, and at that stage, the rents in the market I was in went up significantly. And that property manager, because they were so overwhelmed, they didn't put my rent up. So I was sitting at about $200 a week under market for a good 18 months, which was effectively, you do the maths, that's about $15,000 in my pocket that should have been in the property owner's pocket, but because the property manager had too many properties, the owner was overseas, wasn't up with the market, these sort of things happen. So it's just so critical that you're choosing, yes, you want to get the best outcome in terms of fees, but you want to see what value you're getting. Like this could be the most expensive property manager is the best one for you. Isn't that right?
That's correct. And your example of a property manager potentially overloaded, when you look at it from that perspective, stress is a systems problem. That person is now not able to proactively manage that property. They're not falling back on the systems that are there to designed to protect that asset and to make sure that client's getting that better long-term return. So they're not analysing the rent. They're not looking at those rent reviews. They're not actually saying what needs to happen to this property this year that the client can spend some money on to maintain that asset and to also show the tenant that as an investor, we respect our investment property. We want to enhance it. We want to keep it looking good.
Yeah. Any other mistakes you see investors make, Robin, when they've got their property under management?
The biggest mistake that I would see is when a pain situation arises, and that generally happens when maintenance occurs. There'll be a call from a property manager to say, we need to fix this on the property that's broken, and sometimes owners are like, that's going to cost me some money. I don't really want to spend that right now, because all they're thinking about is that $1,000, that $500 that's coming out of their rent this month. What they're not thinking about is the flow-on effect and the greater pain by ignoring that maintenance item. What that small issue addressed now could significantly impact over time. We see it all the time where properties that we purchase help clients bring on board. Gutters are massively overflowed, haven't been emptied in years, water damages under the eaves, it's going into the bedrooms. That small fix is, $60 to clean some gutters on a yearly basis. You do that every year, you now have less maintenance to spend in the future. So in avoiding that short-term pain, a client's actually creating more long-term pain and greater expense down the line. And the flow-on effect from that is an investor who doesn't want to look after their property and therefore their tenant, there's less of a perception of respect. If I'm renting a property and the owner doesn't want to look after their own property, me as a tenant, am I going to give that same property level of respect when the owner doesn't even respect that? And then the tenant might not correct their kids as much when they're tapping on walls, or they might not just fix this, or, I just damaged a wall, whoopsies, that's okay. The level of respect that they're going to give to that property will probably cost that client a little bit more down the track on fair wear and tear, on some damage when that tenant finally leaves.
Yeah, and that's a really good point. And I see that. And look, I'm an investor, and our team manages my properties. And I get the email or the phone call from my property manager, who sits about 15 desks away. And there's something to fix every so often. That's just part of life. And I guess the way I would say to any investor is to get your head around it is the beginning of a year, whether it's a calendar year or a financial year, you're looking at your forward cash flow estimates. I'm going to spend X dollars a year on this property on maintenance. So let's say you put aside $1,500 a year in your head, and then so when you get the first $500, well, that's all right. I've got $1,000 left, and look, some years you'll go over that budget, and some years you'll go under. But you've got to see that as money already spent. And when you get the call or the email, that's just going against that particular asset account or cost account. You're right. You've got to spend the money on these properties, otherwise they'll start to deteriorate. And that's the capital asset. Yes, that the land goes up in value, but when you eventually want to sell that property, whenever that is, people want to see that the building structure is in pretty good shape as well, don't they?
They do. And I can give an example as well of a client I spoke to quite recently, or an oncoming client. They've had the asset for 10 years. They've chosen to spend virtually nothing on that property. They're now looking as part of their exit strategy to sell that investment. The downside they have now is because they haven't spent that $1,500, $2,000 every year maintaining their asset, they're now up for about $15,000 to $20,000 to refresh the property in order to get fair market value from that when they sell it. So they've now got a greater pain where I need to come up with that money, or I need to get less for my price when I sell.
Yeah, and the other thing I think to think about is the repairs and maintenance are deductible. So if you're a property investor and if you're on the 37 cents or 47 cents tax bracket, you're going to get at least some of that money back when you file your tax return. So it's not all doom and gloom. It's at least the ATO does help you a little bit in terms of cash flow. Now, Robin, most people use a property manager out there in the world. It varies by state and territory, but generally about 7 out of 10 people use property managers. Some are still choosing to self-manage. And why do you think investors want to self-manage? And when do you see them often switch back to professional property management?
I think it's to do, again, with if we look back to that pain pleasure sort of metric, and when someone's looking at the rental return they're getting, and if they're viewing property management as just rent collecting, then, I can do that myself, no problems at all. But when they're looking at property management as someone who's looking after my asset, someone who's looking after my tenant, someone who's effectively breaching my tenant if it's not done well, someone who's ensuring my landlord protection insurance is there, the building insurance are up to date, someone who's ensuring that regular items happen. But there's also a lot of compliance risk with a property. Every state and territory has different ways and different Tenancies Act, and with those different Tenancies Act are different legal responsibilities. So someone who doesn't know better won't do better. And if you're not aware of the changes that have occurred, you could be neglecting a very important area of your own asset management, which could lead to a big problem down the track.
And look, we see it in the press where self-managers often don't follow the rules. They don't put the bond in the trust accounts. They keep it in their own bank account, and they regularly get prosecuted by the various regulators around the country. I think the other thing that I've seen with self-managers is, look, some people very much like to control everything, and that's one of the reasons why they do it. Sometimes they're maybe retired and got a bit more time in their hands, so they want to do it. But where I see it go particularly bad, particularly for the owner, is they get too close to the tenant. The tenant becomes almost their friend. They talk to them about different things, and that's nice. But you need to have that. In my opinion, I've never self-managed. You have that professional barrier between you and the tenant. They are a client of yours, and obviously vice versa. They're paying you money, but that professional management in the middle to me is critical, because I've seen it where people go, oh, they're such a nice tenant, and I know it's $100 a week under market, but they're really nice people. Well, my philosophy on that is there's lots of nice tenants around. If you want, but they're not a charity. If you want to give to charity, you're better off to charge market rent and give that $100 a week to a charity, maybe someone who really needs it, not necessarily a tenant. As my example earlier, I didn't need that money, but that sadly for that owner, the property manager gave me that charity because they didn't put up my rent. So I think that's the other thing that I really find is that self-managers, and who wants to call on the weekend when you're trying to enjoy yourself, and all those sort of things. I think it's that risk of getting too close to your tenant. You're not you're not doing everything you should be. It's an investment. It's not, and I think that's where I see self-managers go downhill as well.
Yeah, we're all generally nice people. So if your tenant calls you up on a Friday and says, look, I've had a terrible week, this is what's occurred in my life, I won't be able to pay the full rent this month, and being a nice person, you go, yeah, no worries at all, just make it up here. And then all of a sudden things get worse for that person. Now you might find yourself with a tenant significantly in arrears, and now you've got no landlord protection insurance because you didn't issue breaches in line with the Tenancies Act. So you've now left yourself vulnerable for doing the right thing, helping the tenant out. You can still issue a breach and be nice and be respectful, but you've still got to follow those rules to make sure you cover yourself.
Yeah, that's exactly right. If you don't follow those processes, with good reason, the insurers go, well, we're not going to insure you for that. So you're not going to get your loss of rent if the tenant ends up having to leave the property. Now, Robin, when you're looking for a property manager, I guess one of the things that I would suggest, and I'm sure you would, is to find out more about how many properties each property manager looks after. And look, it varies. It could be as low as 90 or 100, or it could be with some firms do 200, and it depends on the level of support they get. Some people outsource, other people in the business do leasing and routine inspections, et cetera, But we all know that too many properties is ultimately going to lead to burnout and poor service. So how do you assess what's a fair number of properties that someone should be managing?
That would be, in my opinion, the right questions you're asking to that person you're meeting early on. Quite often in most agencies, the business development manager, they're often called within that company, is the person you'll meet, and they're the ones that you want to get a good foundation of what does this company do? What is your process around breaches? What is your process around tenancy selection? What is your leasing process? How many staff do you have in your office? What are those staff managed? Do they manage by area, by clients? So what's happening within that agency itself, so you can determine, all right, I'm engaging with XYZ real estate company and they're offering me this, their property managers roughly do this, and this is what their greater team do. That whole team support and that team dynamic is crucial. And this is something which is unfortunate within the property management industry within Australia, but the average tenure for a property manager is generally within 12 months. They may have left the industry. So the nature of the industry means people don't always stay as long as we would like them to. And if there's not a right team structure support and the right company you've selected, what happens should your property manager that you do like and trust has now left and gone somewhere else? What is that greater team?
Yeah, and even when they go on holidays, everyone has 4 weeks holidays a year. So what sort of support staff would generally a decent size, good quality property management firm have in place?
You'd be looking at what are areas of competency for different people and what can they do well. So if I'm a property manager, I need to be spending my time doing the best things that I can do. That doesn't mean I'm going to be the best person suited to drive around and do home opens. However, there might be someone very well suited to meeting, greeting tenants, making the property available, screening those applicants for getting that done, when I might be resolving issues on ongoing management, value add for a property, any dispute or conflict resolution that may have occurred for the property or the portfolio. So it's a good leasing team. It's a good marketing team that's there. It's potentially oversight as well. Who's looking after this department as well? So should something arise, who can I go to make sure there's a resolution there? So if you look at a good-sized business, there's probably going to be a team leader, department manager. There'll be senior property managers. There'll probably be some assistant property managers learning the ropes, coming through and supporting a leasing team, and that leasing team will generally also do a lot of those tenant screening.
And I think that gets back to, as you mentioned, the tenure of property managers is generally pretty short. Fortunately, at Momentum Wealth, it's much longer than that. But that's why I think it's crucial then you're looking for the firm, not just, this particular person who's going to manage my property, because they may choose to leave for whatever reason. It's choosing the right firm, isn't it? It's got the right structure, right systems in place, so that if that property manager leaves or goes on holidays, the notes are in there and the good systems, and there's other people to support them, isn't it?
That's what I like. That saying is, that I really like, which is how you do anything is how you're doing everything. Look at the greater company. What is the company doing? What's it doing well? How are they perceived in the marketplace? And that's who I want to sign up with. I want to sign up with the business rather than the individual.
So, Robin, tenant selection, that's always the important for a property owner, and particularly when it's your first investment property. People generally really want to focus on making sure they get that perfect tenant. Of course, in a more buoyant market, whereas a very low vacancy rates, we certainly can be fussier. And I guess most people would say, look, I want a tenant who's professional couple, dual income, they're going to stay for 5 years or more. Well, the reality is they're not likely to stay for 5 years, because they're probably going to buy a home if they're a dual income. There might be, unless they're on a corporate lease transfer, but there's not that many of those. There's a few around, but not that many of those. So what are we looking for? What makes an excellent tenant versus, we don't want no one's going to get the perfect tenant, but what makes an excellent tenant?
Yeah, the perfect tenant is a fantasy. It's something that we all want, and that takes out the human element of property management and leasing a property. We're leasing it to an individual or a family. So those are people with ups, downs, good days, bad days, etc. So what we aim for and what we're trying to look for from a good tenant is consistency. Are they picking up the phone? Are they available? Are they rocking up on time? Are they, polite, well-natured? We're looking at what is their history. So we'd speak to maybe previous property managers, previous owners, to go, what is the track record of this person? Would you rent to this person again if they wanted to apply for one of your properties? Because what we're looking for is someone that we can work with really well, because you don't need a perfect tenant, you need a really good relationship. And if that person living in the property wants a good relationship with you and is respectful to your property, has capacity to pay the rent, and they've got a good history, that's what we want. We want that as the tenant, rather than put all those aside, just wait for this ideal, which may tick all the boxes on application and income, but you end up inheriting a tenant that complains about the smallest little thing, makes your life very difficult. And on paper it was great, but that person has unreasonable expectations for a house that may be 30 years old.
And I think that's a really critical thing that we now have in most states in Australia. The Western Australia is the outlier, where you can, at the end of a lease, terminate without any reason, which I think is fair and reasonable. That's a contract, and the contract comes to an end. You should be able to say goodbye if you, for whatever reason, you're not getting on with that tenant. But unfortunately, the various other states, mostly around the country, Victoria, New South Wales, Queensland, as the larger ones, have all got these laws in place now that say you cannot evict for no grounds. So if the tenant's paying rent but being incredibly difficult and demanding, and you can't get rid of them in these states, you're stuck with them as long as they're paying the rent, and they've effectively. So I almost don't want to call it a tenancy for life, but it almost feels that way. The only way you can get them out is if you sell the place or you want to move back in, and that's a very challenging thing. So selecting that tenant up front becomes even more critical in those locations, because you're potentially going to be with them longer than your partner, perhaps. So it's a long time to be with that tenant. So I think it's exactly. And one of the things that I know we do as a business, but good quality agencies also will do, is all those reference checks, all the other checks you've got to do. It's so critical, isn't it?
Completely critical. While you were talking there, I was actually just thinking through my time as a property manager, and so many clients that have an expectation of the rental return they're going to get for their property. So what they do is they go, all right, well, market rent $650, my place is really nice, so I'm going to put it on for $700 a week, which may be, $30, $40, $50 above market. They're not getting many applicants through. So the only people that sometimes come through are people who are not getting properties that are fairly priced. There's a good strategy, which is like, if I price my property in line with market, and if I put myself in the position of a tenant, have a look on the different platforms that are out there. If I was looking to rent this house in the marketplace, what would I pay for it? And if you go to market at that rent, you open yourselves up to all the tenants looking in that suburb for that style of property. And then hopefully instead of one application, you're getting 5. And now you can find the best applicant for that 5. But a lot of clients are thinking, no, I want that extra $30 a week, but not realizing the potential headache they could get themselves into in the future.
The poor tenants, the tenants with bad track records, very often target private landlords for the simple reason they know that they're very poor at doing the checks and everything else that a professional property manager would do. So as you often find, those tenants pay a bit more because they've got a bad track record, bad reputation. The private landlord thinks, well, happy days, but then they get left all the headaches. And again, in Victoria and other states, you're stuck with them. As long as they keep paying that rent, you're stuck with them effectively for the lifetime of your ownership on that property. So just so crucial to do that checks up front. But Robin, one of the things you mentioned earlier on, some people just perceive property managers as just rent collectors, but there's a lot more to it. How can a good quality property manager help protect the value of your investment over time?
What I'd be looking for from a property manager to maintain my asset is someone who understands what's happening in the marketplace, someone who can suggest when to put the rent up, when not to put the rent up, when to maybe be lenient, when to be strict. What is their attention to detail? There's another quote that I love my quotes, is what gets inspected gets respected. So someone who's got good attention to detail for the property sets an expectation up for that tenant very early on in the lease that this is what we expect of you, rather than someone who's like, oh yeah, we'll let that slide. Oh yeah, that's no biggie. We'll just check it next time. We're looking for that property manager who's setting those boundaries and those rules early on, someone who understands property, someone who understands what can go wrong, someone who's not scared to have a difficult conversation with a tenant and saying, hey, look, unfortunately, we understand where you're coming from, but this isn't good enough. If this doesn't get rectified, it could lead to this, this, and this. Can we work on a plan with you to get that sorted? Much better to do that over the phone than via email. So what is the ability or willingness of the person to actually pick up the phone and talk to their tenants and resolve things, rather than resort straight to email, which can be often misinterpreted and lead to conflicts that wouldn't otherwise exist just based on the lack of tone within emails. So I'm looking at the whole bigger picture. And again, going back to how you do anything is how you're doing everything. What is my standard engagement that I've had from that company? Because that is what the tenant's going to be expecting as well.
So what about proactive stuff? I mean, what should a good property manager do proactively with their owners in terms of maximising the value of and the rental returns in the long run on that property?
Real discussions. Crucial conversations. What do you need to spend on my property this year? What can I do? You've had the property now with the same tenants for 5 years. We would love to keep these tenants. They're doing a great job. Is there anything that you've got in mind with your accountant that we could action for you this year to get that property looking good? A property manager who's going to go to a property and say, look, I've noticed this is starting to deteriorate. I've arranged some quotes for you. This is the action plan that I'm thinking to in order for this little issue not to become major for you. And also someone who's willing to pick up that phone to communicate straight away with that tenant and sort those little things out. You're looking for someone who has the long-term picture of that asset too, and understanding that if we can do the right thing right through the tenancy, we're going to one day have a vacant property again when that tenant moves out. We're going to attract another good tenant because it's a good property in a good area that's being well looked after, doesn't need significant maintenance, and we're more likely to attract a good tenant who wants to live in a nice property.
Yeah. So can you give me any examples where you've seen a property manager really positively influence the outcome of an investor's returns, either by preventing a loss or perhaps they've helped value add in some way? Can you give me examples you've seen?
I guess white ants, termites are a big issue. It can be quite expensive. A lot of insurance companies won't cover that. Having a discussion with the client early on to say, we recommend these barrier treatments get done. We recommend you need to have this fixed. Having discussions around there was recently one where the owner was just unwilling to do any maintenance for the property, and that was causing some ongoing mold issues in that property. So it was having a discussion with the owner about, these are your expectations of a property owner. This is what you need to do for your tenant that's there. If you don't do it, these are the following on effects from that, which would end up for that particular owner, those tenants would have vacated that property and they now would have had to fix it anyway, had a vacancy rate that was there, and it would have affected their income. So it's picking up on little things like that to have those discussions with. As well as those value add things you can do over time. Look, this is getting a bit tired now. It's quite obvious that this needs to be rectified. Tenants can see it, prospective tenants can see it. We need to spend some money on refreshing the gutters, repainting the front exterior, fixing these dodgy pavers in the front, just to make sure we have that good street appeal, that good looking property. So a lot of people think there's like a magic thing that they can do. There's nothing magic. It's little things done consistently. And when a property owner observes and actions those little things on a very regular basis, that's what's going to lead to good long-term asset management.
Yeah, and it's also when you're buying the property, and we've discussed this on other episodes, but when you're going to buy the property, you've got to understand what you're getting. And if you're someone who wants to really focus on that capital growth and high land value component, the house is going to be a bit older. You're going to have to spend that money. And it's just something as an investor you've got to understand. The higher growth properties, the higher land value, the less the building, the more likely you're going to have to spend money. And it's always keep that in mind. But Robin, are there any common performance metrics or KPIs investors should use to assess how well their properties are being managed?
Yeah, I would say response time. How long does it take to hear back from my property manager when I have an inquiry? Is it a day? Is it 2 days? What is the vacancy rate within their company? So out of how many properties that they're currently managing, how many of those ones are sitting vacant now on the market? Every single vacant property is costing that client 1 week's rent for that week. So what's being done to minimize those vacancy rates that are there? What are the company policies and rules around rent increases? Where is market expectations in line with what's currently being paid for the current investors who have got assets there? So the questions around how regularly do you review the rents? When are those discussions coming up? How am I a part of that? What are the regular things that you guys do as a property manager that maintain my asset? So what is on your list of things you're discussing with me every year? For example, the evaporative air conditioner, great, should be serviced before summer. Gutters need to be cleaned before winter. You're in a high bushfire risk area, great, maybe clean them twice a year. Try keep that clear, keep it good. Ask them what they're doing. Do you have regular reminders about pest control? Do you have regular reminders about getting a plumber out to change the washers on a property? There's something that's come up quite recently that most properties have it's like a pipe going from the toilet to the wall. This metal pipe has about a 5-year lifespan. So many properties have them where they're 10, 12, 15 years old. Now, if they're burst and your insurance company doesn't want to cover you because you haven't maintained that one pipe, that's a significant expense for you. So it's like, okay, cool, what proactive things can I do? All right, that's coming up to its lifespan now. So next time I get a plumber out, I'm going to get that replaced as well at the same time. It's only going to cost me $40 compared to thousands if it damages the floorboards.
Yeah, no, that's a good point. Now, I want to talk about leases. And look, today we're focused very much on residential property management. And as we know from the book, great place to start in residential. Hopefully people will get to commercial. If they go through a fund, they don't have to worry about the management because the asset manager will do that. But in terms of leasing, look, if you're buying a commercial property, office and industrial properties, is pretty much you can do what you want. That's all based on negotiation. But in retail leasing, there are in nearly every state and territory in Australia, there's quite significant restrictions on what must be in the lease and what you can do with the tenant. Residential's the worst. Most places around the country have got very stringent requirements. Often they'll have standard form leases. But importantly, that doesn't mean you can't add additional clauses. And that's one of the things I see also, again, self-managers, they use the off-the-shelf template that the government puts out. There's dozens and dozens of clauses, isn't there, that a good quality property manager will put in a lease that helps protect the owner.
Yeah, and that evolves over time as well. So if you're a private landlord and you use that standard lease, you don't know what you don't know. So you're signing that up and then something eventuates. You then refer back to that lease. Oh, that's not covered within the special conditions of that lease. I never told the tenant that part of their responsibility might actually be just to keep the gardens pruned to a certain level. I never actually put in writing that they actually should vacuum clean the filters coming out of the ducted split systems that are there. It could be something as simple as that. It could be pot plants on the floor, on the carpet are not permitted, or mattresses straight rate on the floor, or what are the rules that are there? So if it matters to you and it matters to the property, it should get documented within that lease. But then there should be not just one standard document that people default to. A good property management team will review their leases maybe every 6 to 12 months and go, what issues have we had in the last 6 to 12 months? What can we put in our leases now to make it clear so any future clients don't have to experience this? So this document evolves over time, and unfortunately it just gets more onerous over time, but at least the expectations are clear from both the owner and the tenant when they move into the property.
And look, I have, of course, read our conditions, very lengthy additional special conditions, and you think, gee, some of that would be maybe common sense, but it's actually not. Common sense isn't that common. And telling tenants about where they can put pot plants and you say mattresses on the floor, quite rightly, they could just say, even if it was scratch, it's fair wear and tear because I had it on the floor. And by preventing that, you're preventing all that extra wear and tear on the property, aren't you? Yeah,
I've even seen someone had a very expensive splashback and there was no firm in the lease explanation of what materials needed to be used to clean this. So the person cleaned it with a scourer, massively damaged it, and unfortunately, when you didn't define what it is, can that be considered damage or not, or is that wear and tear? Because you actually never said that this very expensive finishing requires this cleaning.
Yeah, exactly. So Robin, look, some great tips today. What would be your top piece of advice for investors about property management?
Property management is not a cost, it's an investment. It's something that you're claiming back from, but it allows you to have peace of mind. It allows you to have some certainty in what's happening. It removes you to a degree for some difficult decisions and discussions you may need to have with a tenant. It's about finding the right property manager as well. So take your time. Don't just look at their figure as what they're charging. Look at what am I going to stand to lose if this company does not do a good job for me. Yes, I've got to win on cheap fees, but now my property sat vacant for 4 weeks. So look at the broader company, their reputation, what they do, their systems, their processes, etc. Be proactive, communicate, show interest with your property, and spend a little bit of money every year. It makes a huge difference to that tenant as well as your long-term return.
Robin, some fantastic advice once again. Thank you so much for your insights. As we've explored today, effective property management is a vital part of protecting your investment and supporting long-term property growth. It's not just about collecting the rent, it's about taking a considered, proactive approach that aligns with your broader investment goals. Choosing the right property manager, getting the right systems in place, and staying informed can make a big difference to your total property returns. Thanks again for listening, and please join me for the next episode as we cover the final stage of the 9 key steps to growing an income from property for life.
Thanks for tuning in. If you're enjoying the podcast, please take a moment to rate us to help others discover the show. Please note that the information shared on Property Investing Roadmap is general in nature and doesn't take into account your individual circumstances. The information is for educational purposes only and should not be relied on for investment or financial decisions. Always seek professional advice before deciding whether to invest.